Well, hello, everybody. Welcome to tonight's special session with Raghee Horner. Over 35 years of trading experience, Raghee is pulling back the curtain on how she builds her long term portfolio using the same tools that power her successful swing trades. If you've ever felt overwhelmed by market noise or unsure about what to hold for the long haul, you're in for a treat. She's about to show you how she simplifies long term growth, times the market with confidence, and identifies hold worthy opportunities. Let's dive in and see what real strategic investing looks like. Take her away, Raghee. The floor is all yours.
Hey, Daryl. Much. Always great to hear your voice and fantastic to see everyone. I'm going to turn my speakers down here in the office. Welcome to my office. And thanks for being here this evening. Tonight, we're going to continue the conversation that we had on the long-term growth and importantly, your questions. So type them on in. We've got folks here in the office out there in Texas. So we've got them sorted out. So most importantly, your questions. If you think about it, isn't it kind of sort of frustrating how we sort of think about questions and the windows of missed opportunity, right? As soon as the webinar is done, we get those brilliant questions. So no worries, you're going to have another opportunity to ask me those questions tonight. So good to see everyone. And if this is your first time, you're going to learn a lot about exactly what I'm doing with my longer term account growth. So trading options for growing your account with indices, stocks, ETFs. And yes, tonight we're going to talk about leaps. All right, first things, and this is one of those images I look at again and again. Do you ever feel like you wish you had bought a stock like Amazon, like Netflix? Let's take a look at Monster at the top of this list, right up in here. So you can see the symbols right along here. Like Monster, either wishing you had bought these stocks, or if you did buy, maybe you're wishing you had bought more, or maybe held on to it. The good part is, and I know we're going to start with pain, Rog, I didn't do that. The good part is, even if you didn't get into these positions, remember, gang, there are always new positions all around us. Hindsight doesn't really help. So that's what we need to do. Focus on the new opportunities and remember those opportunities are out there. I look at this and it stings a little bit, right? How do I make sure I don't end up missing out those great opportunities? So before we get too down, stop. Stop thinking about yesterday. Oh, am I not sharing my screen? Oh, it'd be really helpful if you can see my awesome screen. Yeah, it did not share. All right, we're going to fix this right now. All right. I get to go over that terrible screen all over again. All right, so let's stop, collaborate, and listen. All right, let's go back. I thought it was shared. Thank you, gang. We're going to talk about this slide again because this is the one I know a lot of you have seen before. It's an important one, and it's the woulda, coulda, shoulda, right? So again, do you ever feel like you would have bought Amazon, Netflix? What else is there? Monster, Nvidia, Apple, Ross Stores, either wishing you'd bought those stocks or maybe you bought them, wish you'd bought more, wish you'd held on to it. Again, these opportunities are always going to be something that we can find if we have a process. Hindsight doesn't help us, right? So let's not beat ourselves up too much. Although, again, it's very tempting to looking at this list. But again, all right, everyone can see the screen now? Okay. All right, stop thinking about yesterday. That hurts us all. History has shown us that there are always new opportunities in the market. Yes, we can lament the things that we've missed, or we can find a process to go find those opportunities. And the first thing, the first step is to have a goal. It might sound silly, but it's an easy way to snap ourselves out of FOMO and all sorts of negative things. Have a goal. And what is the goal? Always got to start with the most important thing. Have our money grow and compound over months to years by buying stocks, ETFs, indices, and other growth-oriented assets, maybe crypto. Be it for retirement, buying a car, taking time out of work and into a vacation. We all want a relatively predictable place to put our money to work while we aren't having to. And this is so important. And this is where a lot of traders go wrong. We don't want to micromanage it along the way. That hurts more longer term traders or active investors than darn near anything. So again, the goal is to have our money grow and compound. And the first time you get a good taste of it, you'll never be the same. So this is why long-term growth works. All right. This is oftentimes that mindset shift a lot of traders need. Compounding is the eighth wonder of the world. Einstein said it. I don't know, but let's give him credit. Smart guy. It is exponential. The longer the money stays invested, the more powerful the growth. So let's take a 10% annual return, doubles your money about every 7 years, stay in for 21 years. It grows, right? That's the point. We want it to continue to grow, but we need time. So over years, upward trends dominate. And I'll show you an image later on that will show you 40 years of why this is true. Everything I'm going to talk about here today, gang, is based on decades and data. So upward trends dominate, especially strong companies. Long-term investing is going to allow you and me to ride out crashes and panics and FOMO and corrections. Long-term investors are, if you want to think of it as active investing, we buy quality and we wait. All right? No panic, no FOMO. Who wants to FOMO? We call them FOMO Momo Bozos, by the way, here in the room. You don't need to be a professional, right? Consistency beats brilliance in the long run. And we know this to be true, but a lot of times we're lacking a process. So, step two, every goal needs a plan. All right, now we're talking. Raga got the mindset. Now, what do I do? So, first thing is myth busting. You can time the markets. That's the biggest lie told on Wall Street. It requires some patience and a process. Markets move in cycles. We know this: expansion, peak, contraction, recovery. There are actually four phases of market behavior. So you learn how to invest in the long term by buying during contractions, right? Recovery, sales. We call them blue light specials. Buy low, sell high. We trade that way. We need to invest or long-term trade that way as well. Learn how to buy in stages when stocks are falling. We've seen this recently, 10, 15, 20%. One of the things that we just did in the Sector Secrets Mastery Long-Term Account Growth Room, this was an actual setup sent out to members. We bought the SPY, the S&P ETF, at $490 and actually 58 cents this year, actually just in April. So we learn how to read charts with indicators that will take out the noise, the news, the noise, and guide you on timing. So I have a plan based on not the chatter in the market, but a tried and true plan that I can see on the charts. I learned to recognize opportunities and avoid risk. You can absolutely learn to do that. Again, everything starts with, let's scratch out the biggest lie told. You can time the market. Learn from someone who's been doing this successfully for a long time. That's what I did once upon a time, and that's what I'm offering to other folks now. I've done this for 35 years, and I want to teach you what it is that I've done. But we really have to kind of take out a lot of the lies we're told. By the way, who tells us we can't time the market? People out there who want us to give our money to them to manage and charge us fees for. All right, so here's the proof. I can talk about mindset and process, but here's the proof. This is the Sector Secrets long-term portfolio. This portfolio started in September of 2022. So take a look at what's on this list here. And these are the 17 positions that are currently in that book of active investing or long-term growth trades, starting from TLT, going all the way down here to XLB. Most recent trade was May of this year. Oldest trade on this list is September of 2022. So not even 3 years old. These are real trades that we've taken in the mastery, the Sector Secrets Mastery, since September of 2022. And for those of you that may not be familiar with what the Sector Secrets Mastery is, this is where I get together with hundreds of traders every day to day trade, to swing trade, and to long-term trade. And tonight, we're talking solely about the long-term trading because we know not everybody wants to be a day trader or a swing trader, but we do know that just about everybody wants long-term account growth success where your money can work over the long run. What's the long run? Months to years or more, right? Solid symbols, minimal maintenance. And let me emphasize the minimal maintenance. That's not just a selling point. Minimal maintenance is part of the process. One of the worst things traders do is they micromanage. So minimal maintenance is really important. Think retirement, think buying a house, college funds. So again, let's take a look at a few more of these trades. So there's 17 positions here in total. And if you look here from the symbol in the first column, and really probably the thing most people are interested in, aside from when I got into the trade, let's get right to the nitty gritty. What is the total return and the 1 year total return? Right? What have I done with this from a 1 year and then the total? And you can see these right at the bottom. So this would be 2025. This would be since September of 2022. Okay. Now, you can see here is 118%, 118.42, and just about 43, 42.5%, 42.69 for those of you that can't see the font. Sorry, there's enough positions here where you can't see it. You can see the P&L since the inception of the portfolio. Its current value, today it was up, wow, today it was up about 0.5% or $11,100. And what I want to mention here with this is think about the average rate of return on the S&P itself. It's about 10%. Think of your average hedge fund, it's single digits. So when we're talking returns of about annualized here, just over 30%, this is what I'm talking about is possible. So if you really want to wrap your head around what's possible, this is what we've been doing in the Sector Secrets Mastery long-term account growth in under 3 years. All right. So let's go on to the next step. All right, let's talk about some of the trades that have built this portfolio. First up, basic materials. And this is one to keep an eye on going forward. Basic materials is the XLB ETF. And once again, all of the trades that we're going to be talking about tonight are real trades and real setups that we've taken with many of the other members who are part of the Sector Secrets Mastery world. All right. So these aren't things that I've done off on my own. We've done this with the group. Some of you may not be familiar with the charting. And by the way, would y'all mind if I cut the camera? I mean, I don't know if it's sitting over the chart or not, but I'll come on back later on. I find me very yakking on top of the screen distracting. All right, does that work? Okay. All right. So some of you, again, let's talk about this XLB. So every one of these charts I'm going to go over are setups that we've taken. And again, these were alerts to members. So let's go to what we're looking at right here, which is some of you may not be familiar with the idea of charting and indicators, especially the ones on my chart. What are these lines, colors, dots? Don't get stuck on this part because I'll be talking a whole lot more as we're moving along from example to example. And just again, collectively, these indicators are part of an automated toolkit that I use that are a simple download away. There's no tech, there's no charting needed at all. These are automated tools that I'm running on TradingView, and you don't need any fancy skill to, in fact, it's the easiest set of indicators to import on TradingView. By the way, I'm not selling any indicators tonight. These are free tools that I'm going to show you. So before anybody says, oh my gosh, I'm going to pick up indicators. Nope. These are free indicators that I'm using on TradingView. They do all the charting work for you. They help you identify key levels, such as what price to buy and the timing of when. So let's talk about this XLB screen, and I'll point out a couple things, and we'll keep digging in as we go along. So this is a weekly chart. So let's talk about what a weekly chart is. That means each one of these candles represents 1 week of trading. The next thing is the top tier dots. These are these white dots you're seeing here. All right. These are white dots you're seeing here. And I consider this a line in the sand in terms of something being, think of it as an equator. Are we in the bullish hemisphere of price action expectation or the bearish side? Okay, that set of white dots helps separate that. And you can see those white dots, they're called top tier dots, show that this level is a key shift. And even when price gets below it, it doesn't stay there very long. Look at the majority of this time since mid-2022 to mid-2025. Look at how long we've spent above these dots. So that means there's a key shift there, and that by holding these levels, buyers are stepping in and supporting the long side. So wouldn't it be great to know what prices are support and what levels of support tend to pull prices up very quickly? Those white dots do it, and they're automated. So after a drop to, or even slightly through a level like this, the long side via shares are often going to be the last thing most traders and investors are considering. Are people thinking about buying on the way down? On the way down? No. What are they doing? They're panicking, they're selling, they're freaking out, right? So it's the last thing most traders and investors are even thinking about doing. And that is a huge edge, right? So while everyone else is panicking, I see a blue light special. You and I are going to go shopping. So as we go through the trades, one basic question I'm going to ask again and again is, could this position outperform 10.5%? That is outperforming most hedge funds, and that is outperforming the S&P. We all need a line to say, hey, what's good? Anything above 10.5% annualized beats the S&P and beats most hedge funds. Do I want a whole lot more than that? You bet. I just showed you the portfolio, right? I want a whole lot more than that. So there was a question here. Trish Boss, you want me to answer this one now? Okay. So the Trish Boss just gave me a question, and the question is, I'm going to go back to the portfolio. What percentage allocation for each stock in the portfolio? So a couple things. Number one of the things that I do is I use a spreadsheet that allows me to determine how many dollars worth of shares or even leaps I'm allowed to buy for each position without exceeding the allowable risk to the account. That's actually the answer. So I start with what's the allowable risk to the account. So everybody might have a number. Rog, I don't want this to present more than X percent risk to the account. And I start from there. That is what determines the budget. So really, every one of these positions are roughly going to be very similar in size, not exact. And the answer is, I'm really a fixed bet position type trader, even in my active investing. So everything starts with risk first. What if the thing doesn't work out? Right? What if this, and we're going to talk about why holding forever is a big no-no. But yeah, as far as what percentage allocation for each stock in the portfolio, the answer is it's calculated by a specific spreadsheet that I use and teach traders to use, where you type in your account balance and then it spits out all the data regarding maximum number of dollars you're allowed to spend in each trade, which I seldom actually get to. I never max out, but that's the way I look at that. So it's based on a fixed bet approach, and the budget is based on an allowable amount of risk per position to the account, which I never exceed. So, all right, let's get to Johnson and Johnson, because this might be actually a really good follow-up to that question. And part of that fixed bet approach, and the reason I'm able to get these kinds of, where's my little portfolio there? The reason I'm able to get these kinds of returns is I'm not making a big bet. I'm not pushing all my chips in the middle of the table. I want all these individual stocks to contribute to the whole. So that means, let's talk about Johnson and Johnson here. That then means holding forever. I know my grandpa Buffett, I completely respect Warren Buffett. I call him Grandpa Buffett endearingly, but he talks about forever. And with all due respect to him, holding forever is never the goal. Johnson and Johnson's a perfect example of not holding in the hopes of the stock becoming productive, holding in a portfolio, right? At some point, I'm going to say, this is just money that isn't doing anything for me. And a couple things you might even know, Rog, once we got around these dots, we really couldn't establish price above or below it. That's kind of a warning, and that's just one indicator from the toolkit. Look how it's screaming at us there, right? So here's what I do, and you can write this down. It saved me throughout the years from keeping money stuck in an account that's not contributing. Having a cutoff date is key. Having a date after you've entered is key to growth. And that means not holding up capital that's unproductive or worse could start to move significantly lower, like Johnson and Johnson. So you'll notice I paid a buck 58 and a buck 57.30. So those are the two entries, 157.25 and 157.30 per share. And while the position was actually closed out at a very small gain, the stock had yet to recover and push to higher highs. So what happens is I set a certain amount of time after entry and a certain amount of return that I demand from a new stock. I call it making the team, right? And if it doesn't make the team, I cut it. And so this is a great example of having these kinds of time and percentage guidelines around the gains, again, over a set period of time. So one huge mistake a lot of traders make with their long-term growth trades is they think they're supposed to hold things forever. And in the real world, gang, you and I want a far better return than 10.5%. Although remember, you're beating almost everybody in the long-term game if you're doing that. But you and I want a far better return than 10.5%. How about two times or three times or more, right? To have the capital in the account acting as productive as it can be, as opposed to wait and see and hope mode, right? We've got to be using guidelines that allow us to cut something when it doesn't work. And yes, I'll take losses in this account as well. I'll say, hey, you know what? Something's not working and I'll cut it. And Johnson and Johnson is such a great example of something that I had to close because it was tying up money that was unproductive. All right, let's talk about another setup, Google. So giving a trade leeway. So let's talk about the other side of, hey, Rob, what if I get in and after that set amount of time, it's fine, but later on, something goes wrong. So here's a really great example. So giving a trade leeway once it's made the team. So again, when I use this terminology of making the team, I typically mean it's up a certain percentage after a certain number of months. And usually for me, that's a 6 month. Just so everyone knows, it's usually a 6 month period of time where a stock can make the team, right? So I give a trade like Google a little bit more leeway because it made the team and it can be challenged without as many stringent rules around the stock once it's made the roster, right? And then having allowable levels of risk once it's on the team. So giving shares room to move. We can't smother our positions either, right? So giving shares room to move is a balance of keeping risk in the account limited while also making sure underperforming stocks do not lock up my capital. So each player has a role on the team. Now, if you look at that portfolio and you can catch it in the replay and freeze it, I'll tell you there's about three, maybe four positions that I'm going to consider replacing in the next probably 2 or 3 months, especially if we get some of the macroeconomic turmoil that seems to be brewing, right? There's two or three positions that are underperformers. And even though we're up over 40%, I think it could be better. So I'm going to possibly reassign, right, those team players, and I'm going to find better stocks that are performing. And that means I have rules around this. So one of the things I've neglected to do is as we're going through these, Johnson and Johnson didn't make the team, right? Cut it. That one I cut at a slight gain, but some of these are going to be cut at losses. Some of these, by giving the kind of latitude they need, I can buy something for $152 a share. We did that roughly just under a year ago. And it's I forgot, I don't know where it is right now. I grabbed these quotes a couple of days ago. So it's roughly an 18% return since September of 2024. And again, remember, anything above 10.5% is doing its job. All right, let's move on to the next example. And this is what a lot of folks have been waiting for me to talk about, which is, all right, Rog, I get that you look at shares. Okay. I get that you look at shares, but let's talk about leaps. All right, let's talk about leaps. So we can do both. These are not, it's not an either or thing. You can look at both. So let's talk about both here in this example. All right, let me get to the slide. There we go. Is it on the slide? Yes, it is. All right. So first of all, take a look at the How many weeks is the moving average? Oh, okay. So let's talk about Trish Boss just gave me a question, and the question is, how many weeks is this moving average? It's actually not a moving average, but I'll talk about it in a moment, um, to form this dotted line. Sure. So this is actually not a single moving average. So this is not one setting of a simple. It's actually based more on an exponential. But what it was originally when I started this over 3 decades ago, I used to start with a 200 simple. And then I moved on to a 200 period exponential. Now what I'm doing is I'm actually using two moving averages to not only confirm whether these dots, you'll notice sometimes they disappear, whether these dots should be on, because they tend to be stronger when they're on. So we have them disappear when the environment isn't right for a buy off the dots. So I have two moving averages, but they're not exponential anymore. We've updated the code over the years. So I'm looking at two moving averages. They're still loosely EMAs, but there's a lot more in the code that's looking at participation as well as the exponential moving average, which, by the way, it sounds like a lot of technobabble, right? All an EMA is emphasizing more recent data, heavier in the average than older data. So I'm using two moving averages, which are kind of a souped up exponential moving average to create these dots. But if you want to look on your own, not using these tools, just put a 200 EMA. It's not going to be exact or as precise, but it's still pretty darn good. All right, so 200 period. All right, so you can see that Mo is well above the 200. That puts it in the bullish hemisphere. And I'm always on the lookout for stocks like Altria, MO, because number one, they're staples, which make them very resilient over time. And it has an excellent dividend. I don't want to just buy these names at highs and hope they go higher. I want to buy these names on sale. And Altria went on sale early in January of this year, right there. That was the sale. And we're going to talk about another set of indicators on this chart. So one of the things I look at is the color of the candles. Green is bullish, either shade. Blue is neutral, and red is bearish. So you notice it's not a bearish candle in sight in the last year on Altria. So no reason to think that it's not a potential buy. The other thing that I'll do is I'll look at, and you can see it here, it's kind of faint, but you can see green, blue, and red lines. And I'm just kind of showing you where these green, blue, and red lines are. And that is the mean reversion on the weekly time frame. So you've got these top tier candles, the color coded candles. These aren't just Japanese candlesticks, showing me bullish, neutral, and bearish. You've got the equator. You've got these mean reversion lines, and you have something called the multi-trend. And this is gauging the strength of Altria and comparing it to the SPY. And Altria, you can see with these green triangles, that tells me the momentum is bullish, as is the trend. So when this thing has been moving higher and pulls back into the mean reversion, that's the buy. And we bought Altria at $51.50. So that's the shares. What about the leaps? So this is a really big concept, gang. When it's time to buy shares, the timing is also the same for a longer dated option, in this case, a leap. All right. So when Altria went on sale earlier this year in January, frankly, as this thing was dropping, the prevailing notion was that market timing doesn't work. All the news was bad, and buying in this kind of environment is going to be terrible, right? Well, frankly, that's exactly when we bought it. So Altria went on sale in Q1, and once it was on my radar and it shifted sentiment, you can see here it went a little neutral, but look how bullish it had been. Went a little neutral on the pullback into the mean reversion. This is where I don't panic because my indicators are saying, hey, this is a mean reversion. It's been moving in an uptrend. We can see that from the multi-trend down here. And all it's done is given us some neutral candles, not even bearish. All right. So while I bought the shares, I also bought leaps. In this case, the March 2026 50 calls. So let's talk about leaps for a moment. I talked about the timing. It's the same time I buy the shares, but which leaps? All right. So by buying the March 2026, what I want to do is usually, right, give the leaps at least 12 months. That's my preference. Sometimes 18 up to 24 months, depending on the budget that you can afford to buy these options with. But I will focus on about 12 months or even a little bit longer. Buying further dated out options like this give you the ability to sort of mimic a 100 share purchase. Okay. So we unwrapped a lot here in Altria. Shares, yes. Leaps, yes. Give it 12 months. Trust your indicators. Does anyone here think this was good news in Altria? Remember we talked about news and noise? Does anyone think that was the pullback was surrounded by good news? No, but my indicators cut through all that and remind me that I have all the things that I want going in my favor. Okay? All right. So that's Altria. And I love that stock. One of the things that's great about shares and leaps is I can take advantage of a leveraged asset like an option, longer dated option. And by buying the shares, I can take advantage of that wonderful dividend. All right. So here's another example. This was Walmart. And this one is another one we did this year. So again, I have some further dated positions in the portfolio, but a lot of the big winners that we've been taking have been pretty recent. And there's always opportunities to continue to fine tune it. In this case, adding Walmart to the group. So in March of this year, I set up Walmart for the long-term account. I bought shares at 85, and I also bought March 2026 85 calls. So again, what am I buying? Out of the money? Never. At or slightly in the money, longer dated options, minimum 12 months out. That's my preference. You can go closer, not really what I would like, because now you're giving less time for the stock and the option to gain value while this depreciating asset called an option does slowly lose value. So time is part of the edge here. So I got those leaps and I paid $9.95. So this $9.95 obviously isn't what I paid for Walmart. This is what I paid for the March 26 85 call. All right. Right now, last I checked, this might be a little off. I did these slides just a couple of days ago. Last I checked, this is just over 27,000. All right. Now, I bought the Walmart shares as well, right? I bought those shares at 85, and those are doing pretty darn well as well. They're up about $10 a share, which is cool. But you can see how much the leaps were able to increase in value in this same time, right? So once again, mostly green candles, bullish trend, bullish momentum, and a long position in Walmart. And there was a lot of volatility here, right? This was part of that tariff tantrum and what all the implications. While everyone was talking about worst case scenarios, we trusted our tools. And yes, there was a little bit of a red candle, but if I were to tell you green is bullish, blue is neutral, and red is bearish, who's winning the battle? Who has the best players on the field? The bullish candles do, right? Okay, so that's Walmart. Another question here is why no crypto? Oh, you want me to answer this one now?
Yes.
Okay. So Trish is asking why no crypto. All right. So the best way for me to, and I don't mind to buy IBIT and other things. Uh, there's only one way for me to answer this. You ready? And this is actually really helpful. I wasn't planning on sharing this with you all, but I will. Okay. The same approach that I'm using for, and Lorna Bot's out there and she knows exactly what I'm about to talk about. So hang on to your hats. All right. So let's go to a weekly chart and let's take a look at crypto. Okay. This is what crypto's been doing. The same approach, and it's kind of hard to see because of all the climbing. The same approach. Take a look at the white dots. So you all here have been with me here for what time is it? 30 minutes. All right, take a look at the white dots. Take a look at the structure. So I know it's kind of small right now. So all through here, bullish momentum, bullish sentiment. Here's your white dots. Through here, bullish momentum, bullish sentiment. Once again here, all right. It was either neutral or bullish. It went bullish again in here, right? So this is where I'd say these are the periods of time where mean reversions and long positions are going to be favorable. So everything that I've put in what is this parentheses? These are uptrends. Okay. Notice how long we've been above the white dots. Remember I said the bullish equator? All right. The reason I don't have personally, I don't have any issue doing it. I don't have any issue setting it up in the portfolio. But personally for me, the reason I don't is because my cost basis and Bitcoin using the same exact tools and process that I'm teaching you, I can't even say it out loud. That's what I own Bitcoin from, using the same process. Now, it helps nobody for me to say that, right? Because we can't duplicate that. But let me show you something here. Let's say you were looking at IBIT. Let's say you were looking at coin. Let's say, and I don't even know which particular ETF at this point you might be looking at, or even mining related stock, mining related ETF, anything in the crypto world that you're looking at, right? Let me show you how many times you could have bought Bitcoin with this process. You ready? That obviously is unproducible again. The next time, and I don't think I've ever told the Trish Boss this. She's here, by the way, for those of you who know the Trish Boss, the Sector Secrets Mastery. Do you remember when we were watching the debates? Yeah, it's on. Yeah, I've told you that. I bought crypto on the living room floor watching the debates with my partner here in the room, the Trish Boss. And yeah, back in 2016. Okay. How many times could you have done it? Here, mean reversion, right? Now you might say, Rog, what would you do through here? Again, it's a matter of what the trend. I don't want to go through and rehash every candle of Bitcoin, but notice how many times we've had mean reversions, how many times we've been dominated by the green candles, how many times we've come back to what we call the wave. How don't buy it through here. We're below the dots. If all you did were buy every single time we got to these dots, they're called propulsion dots, by the way. And these are free tools that these are the free tools that I use on TradingView. And those of you that are going to take the class, we're going to help you set these up on your screen. These are prop dots. If all you did was wait for the candles not to be red, preferably to be in an uptrend, and revisit the dots, that's how many times under 20,000 and even below 60,000 you could buy Bitcoin. Now, when do all my friends and family call me? At the highs, every time. And you know what I tell them? I'll give them the value. In fact, the last time we even talked about this in the Sector Secrets Mastery was 80,000. That was $40,000 ago, right? That's the last time we said, hey, my Bitcoin folks said, hey, Rog, what would you do with Bitcoin? I think we talked about a range between 83 and 80,000 to pick up Bitcoin. That's why it's not in my account. But I think it's an even better example of why this process works and frankly works on anything. So this is not just a crypto ETF Bitcoin conversation, although hopefully that was compelling enough. Can you do that with anything? Yeah. I bought Ethereum the same way. I bought a number of other coins, but Bitcoin's my primary holding. Okay. So hopefully that answers some questions on that topic. All right, Trish Boss has a lot of fans. Look at that. Hello, Trish Boss. Very cool. All right, so that's Walmart, and that's the question on crypto. But I hope everyone doesn't take it away as, oh, it's a crypto trade. No, gang, it's the same reason I bought Walmart. It's the same reason I bought Altria. It's the same way and the same process I built anything in my account. So again, this one is the May 2026 85 calls. Paid right around $1,000 for them. Last I checked, they're about $18 with over 250 days, I think, to expiration. So I bought 15 roughly $995, roughly $1,000 calls. Okay? So that's where we are right now on Walmart. Again, the leap position, triggered at 85. The share position triggered at 85. Both are winners, but obviously the leaps can add a lot of acceleration to long-term account growth. Okay. All right. So let's talk about the SPY in leaps. So I mentioned before that we bought the SPY, and this was during that tantrum. A lot of folks might say, Rod, why did you buy this? And I'm going to give you all something I gave my nephew a long time ago. And this is a life-changing thing, and I'm going to give it to you right now here in the webinar. When the S&P pulls back from all-time highs by 20% with a high VIX, just buy it. We told our members that that level was going to be to buy it from all-time highs because we have calculations for all this, 490.58. I also have some from around 480, I think 3 and change. Okay, but 490.58 is where the S&P pulled back 20%, and we had that historic VIX. Historically, when a VIX reaches certain levels, the 1 year forward return is 100% of the time greater than where it was during the time of the pullback. 100% of the time. Okay. So some of our members said, Rog, yeah, $490 per share. It's a little rich for my blood. Other members just backed the truck up, which is fine. Others said, Rog, what about leaps? These leaps aren't cheap, not a cheap leap, but at $66 or $6,600, like 66 points a contract. Right now, it's up 150 points. So even if you bought the shares at 490.58, I mean, obviously you're doing great. But if you bought the leaps for $66 each, yeah, I didn't check where they are right now. I have to look. But if you can throw that at me, I don't know where these leaps are sitting. These are the June 2026 490s. Just out of curiosity, I don't have that number. I'd love to know where they are. So the June of next year, 490s. Bot's checking so we can have a number. So I bought them at $66. Obviously, we're at all-time highs in the SPY because I knew that one little trick. All right. And it's little things like that that allow you to grow account. They're $162.90 right now. Holy cow. I didn't look at my longer term account. So when I talk about not babysitting it, I'm not kidding. Bot says these are now at 162.98. Yahtzee. And I have till June of next year. Okay. So that's something that I do. And there's a couple things that I do unique like that. But this SPY, if you can understand and trade something like that, yeah, that's a game changer, gang. That's a game changer. All right. So that was from April. All right. So I've covered a lot here. Let's talk about what we've learned tonight. So opportunities are all around us, right? If we know where to look and when to buy, timing the markets is possible. Gang, the biggest lie told on Wall Street is that you can't time the market. All the people that are telling you that you can't time it, of course they're timing it. Does anyone think that Warren Buffett isn't timing the market? Not only is he doing that, he's usually selling cash covered puts along the way, right? Of course, these greats time the market, and so can we. Hopefully you've seen, again, just based on proof, since we've been doing this in the Sector Secrets Mastery since September of 2022, what is possible. We have a goal, put our money to work for us so it can grow with minimal managing. And the minimal managing isn't hype, gang. That is what's necessary. I didn't even know where those SPY calls were today. You know why? Because I'm not looking every day, right? It's going to actually kill your trading if you look all the time. We have a plan. Get comfortable with charting. I've shown you what some of those tools can do. They're all automated, the dots, the colors, the lines. I just have to learn to read the tea leaves, right? Learn how to identify key levels like those propulsion dots, like that mean reversion, so you have a better understanding of what's going on in an individual stock, ETF, index. And I haven't really in a webinar talked about that Bitcoin position of mine ever. So you got a good idea that it can work on crypto too, right? Time your trade and then buy and hold it for months, if not years to come. So let's talk about timing a little bit. One of the questions that the Trish boss just gave me is, when do I take my money off the table? Well, with leaps, gang, there's going to be two things. With leaps, I'm going to have at least 1 to 3 targets, right? Because it is just a longer term trade. Sorry. It's okay. Trish Boss is giving me all the sticky notes. No, you're fine. You're fine. All right. So with leaps, it's going to be based on time, right? I have a certain amount of time to expiration. And so I'll have up to 3 targets to take profit at as it's going in my favor. Now, if it doesn't go in my favor, there is going to be a stop loss on the leaps. Okay. When it comes to my share-based positions, all right, so when it comes to a share-based position, I mentioned early on, the only place I disagree with Grandpa Buffett is the forever hold. You and I, we have goals for our money. Maybe that goal is college, retirement, a new home, vacation. Maybe it's retirement, right? We're going to need to touch the money at some point. So my plan in terms of what was, you took the question away. What was it? When do I, we're going through the sticky notes.
When do you take money off the table?
When do you take the money off the table? So for leaps, it's going to be set targets. And for the shares, it's actually going to be based on the timeline of when I need to touch the money. Okay. All right. So that's a great question. And these are awesome questions, gang. These are really good questions. And it just makes me that much happier to tell you what's next. And what's next is we're introducing the Sector Secrets Long-Term Account Growth Room. Right? The long-term growth room is dedicated to exactly what I've been doing in the Sector Secrets Mastery for almost 3 years, not even quite 3 years. So those are pretty good returns. This hands-off formula is designed for building long-term wealth and frankly, peace of mind. I don't sweat these. I don't even look at them every day. That's not their job, right? So what we've done is we've decided to offer an active room that's specifically designed for long-term traders who want these kinds of results on weekly time frames with this time horizon. So those who are either traders and you want to add this into your approach, this time frame, or equally and maybe more so, those of you that don't consider yourselves active traders, but maybe an investor or an active investor, right? You're a long-term trader in my mind, and you're going to use and utilize the edge that traders use because we do time the market. That's what a good trader does. So why not apply that to this longer term approach, right? So you can do this despite a day job. In fact, a lot of times being away from the market makes this better, right? So in this room, we're going to be talking about setups, trades, symbols, ones that we're planning to hold for months and probably years. As you can see, we're dedicated to looking for long-term trades where our money can sit and grow. I think Trish Boss had called that, what was it, strategic patience? Mm-hmm. Strategic patience, gang, that's going to be your edge. We utilize charts to identify timing and price for various types of symbols. And again, you've seen it runs the gamut. Individual stocks, it can be tech ETFs, it could be crypto, right? This is as close to set it and forget it. And really the key is not to micromanage as any kind of investing or long-term trading goal can be. And we're going to be navigating these together in this dedicated long-term room. So if you love this topic and you can't get enough of it, now you've got a community that you can join of people that are just as excited as you to do it. So the first Tuesday of every month from 3 to 4 p.m. is where we get together and discuss these setups. And the next session is going to be the 5th of August from 3 to 4 p.m. Eastern, or the last trading hour of the day. We get together live every month to manage our trades, scan the market for new opportunities, and add to our watch list. This is exactly how Altria, Coke, Walmart, the SPY, all those symbols. I think AbbVie was another pretty good one on there. We identify the symbols we want to buy and specifically at what price. Not, I want to buy it today or I want to buy it, on some pattern. I give you a specific price. So now you know exactly when to buy those shares or exactly when, if you like the idea, to buy the leaps. We also spend our time going over the strategies and the principles needed to properly manage risk. The earlier question about position sizing, so pleased you asked that because that's a huge part of it. I don't want to make outsized bets. As much as I love the SPY, and it is in certain accounts pretty large, it's never going to be an all-in bet. right? So position sizing is so important, how to take profits and growing the money over the long run, right? So we do that first Tuesday of every month. And then we look for ideas all month long, but we get together that first Tuesday. Those sessions are recorded. You can watch them at your leisure. You're never going to miss a thing because you can follow along at your schedule. And the reason you're never going to miss anything, again, these long-term trades is we don't want to keep looking at them, right? We don't want to keep moving trades around. These sessions are super interactive with me. You can give me your ideas. Some of our best ideas have come from members saying, Rag, I've been looking at this. What do you think? And then we run it through the process to make sure it's valid for this. And then we look to see maybe there might be leaps available. So again, those long-term opportunities, build a watch list. What do we want to buy? At what price? And then the strategies that will be best for it. Okay. So again, if you can't be there for the live session, no worries, because the cool thing is with every one of these sessions, if there is a trade idea, right, you get alerts. So whether you're in the room or not, as long as you've got the Simpler Trading mobile app, which you can use from your smartphone, it's going to alert you the moment there is a setup that I'm looking for. So you're going to know beforehand. So once a symbol's on my radar, I post it in the alert section, goes to the mobile app, also posted to the room. These trade alerts are set up in a way that allows you time to look at it. So these are not fill alerts, gang. I don't want you blindly doing anything. You're going to know before at what price to buy the share that I'm looking at what price to buy the leap that I may be looking at. And then you can go back, go to your account, do a little bit of your due diligence to make sure you like what it is, budget out the trade with a process that I teach you. And then when the trade comes to the level, you let it come to you, then you take the trade. So you have time to start setting up your trade. Okay. The alerts are not intended to be followed blindly, right? But rather to give you ample time to do your homework, understand position size, that's most appropriate for you and your account size. And there's a formula for that too, as I alluded earlier on the question about allocation. Yeah, it's as simple as using the spreadsheet that I provide to you. All right, so what else do you get with the service? Get the top tier Outlook. You get the Learning Center and the Trading Room Archive. So you get a newsletter from me, which is a big picture premium report. You'll get that every Monday. The Learning Center, which has all the videos that if you ever forget, gosh, Rog, how do I do this? Or what's that indicator do again? Or what is it with position sizing? There's some nice bite-size topics broken down. Again, can I afford this trade? There's a video. How much should I risk? There's a video. And the last thing is the archive, right? Where you can review different sessions that we have. So you can say, I missed the recording, or Rod covered a topic I really want to dive back into. Great. You can watch them all at your leisure. They're all recorded. All right. So again, this all sounds great. Yeah. But this is where you ask yourself, well, is there some sort of cheat sheet or immersion to get to where I want to go to take advantage of these long-term trades? And that's the class that's happening this Saturday, right? July 19. With this service, you're also going to get a strategy class. And I've never done this before. I've never sat down for 4 hours to explain all this ever. This class is your cheat sheet. It's your immersion, everything you need to know, encyclopedia on what it takes to create a portfolio of trades like this, these long-term growth trades. We're going to be together for 4 hours and talk all things long-term growth, all the things that I've studied for 3 decades. Not a kitchen sink of things that are interesting, but all tactical, useful things that I've done to consistently beat the S&P. As you can see, even from that very young portfolio that we started in the mastery based on the alerts that I've sent members, right? So before I get into it, all right, Rod, this all sounds great, but what's this going to cost? Fair enough. All right, with the basic package, you're going to get full access to the long-term growth room plus the class, the 4-hour immersion, a mind meld with me this Saturday for $597. All right. With the pro package, you're going to get full access to everything we've talked about, the class, but you're going to get the room for a year. Right. That's right. That's 1 full year with me. And if you sign up for the pro package before the 21st, which is what, Monday? Yes. Yeah. If you sign up by Monday, sign up sooner than that so you can join me for the class. But if you sign up by Monday for the pro package, you can lock in that 497 price. So if you don't buy the pro package by July 21, you're going to miss out on that introductory offer of 497 and you'll be locked in at that rate, right? Then we have the elite package, which interestingly enough, this is what most folks have chosen to do. So I'm going to tell you what your fellow traders have chosen to do. They've actually done the elite package. And this is designed for those of you that want to trade all time frames, day trading, swing trading, and the long-term trading. And this is where we have the Sector Secrets Mastery. We get together 5 days a week. You get all the long-term growth room benefits, plus 5 days a week of day trading, swing trading, tech sessions with the Lorna bot once a week, and more. We just got long gold as a day trade yesterday, right? So that day trading's been fun. Swing trading, we're just taking out profits on RTX and we're still long hood. So the swing trading has been rocking. And then on top of that, you get the long-term growth room plus tech sessions. And that's $997. And you'll have access for 90 days to the Sector Secrets Mastery, as well as, of course, the class. Okay. So interestingly enough, I wouldn't have thought it, but most folks have actually gone for the elite because they want everything. Cool. This is what the schedule looks like. All right. So let me show you the schedule. For those of you that are thinking, okay, Rog, maybe I want to join you in the mastery. The elite package gives you 90 days of daily access. So this is when we get together. This is all Eastern time. We start the day at 9:20. We day trade for an hour. I think we've taken 8 or 10 day trades this week. It's been a pretty good week of day trading. Yesterday's gold trade was just a pleasant surprise, but we ended up with a beautiful long gold trade. Had another 2 winners today, AMD and, oh my gosh, what was the other one? Oh, the QQQ? Oh my, I've since forgotten. It's been a blur. Lorna Bot's going to tell me. IWM, that's right. I knew it was an index. We had a gorgeous trade on IWM today as well. The Russell. So again, if you want to join me for day trading and swing trading, and as well as the long-term growth account, this is what the schedule looks like in the Sector Secrets Mastery. Okay. So it's going to be this Saturday at 11 p.m. Eastern. We're going to be together for 4 hours. And I'm going to answer your questions. I'll answer some questions as well. Trish Boss has given me plenty of them. Head on over to simplertrading.com/grow strat. All right. It's coming up, gang. What else do I want to let you all know? If you have any questions, feel free to call the office or email. My members who are out there, my Sector Secrets Mastery members, remember we have a special deal for you. Okay, so if you go pick up the class, just remember it'll assign the discount when you're checking out. I'm sure we have plenty of our Sector Secrets Mastery members out there, or just call the office and they'll hook you up. Okay, all right. Then we also have PayPal available. You can pay through PayPal credit, 0 interest for 6 months. Can't beat that. And then this is what clients are saying, gang. This is what our members are saying. Right? So yeah, Rog, this works for you. Great. You've been doing this for 35 years. But what about people that are just picking up this process from you? Are they really starting to understand and benefit? Yeah, gang. And quickly. And the reason I say quickly is because remember, I'm giving you all the watch lists and the setups and the indicators are automated. So when you're looking for setups, you're not having to do anything manual. Nothing. Right? You just need to know what the colors mean, what levels you want to focus on, and whether or not that stock is either in an uptrend or has a probability of continuing in an uptrend. Because you have the tools that basically I used to use my own experience to understand. Now I've basically automated those processes even for myself. I can't imagine not using the automated tools. It makes life very, very easy. All right, so let me answer some more questions here. A question about the chart of gold. Yeah, I'm happy to look at some of these charts with you all. So remember again, when I'm looking at these charts, I'm looking at a weekly time frame, and I'm kind of getting into a little bit of what you're going to do with me in the class. So what about the chart of gold? I'll give you exactly what I would tell my members if you're with me. If you want to buy gold, don't even do so until about 292, or preferably between 287 and 279. I would not look for a pull. I would not look to get long in gold until we get that pullback. You might think, Rog, but what if it goes, straight up? What we want to do is utilize these automated support and resistance levels. I didn't talk about the Darvas too much tonight, but I automate support and resistance with these tools as well. And the closer we can get to the level of support here or this mean reversion, that's going to be the buy, gang, right? I don't want to buy things hoping it keeps going higher. I want to buy things on pullbacks. I want to buy things like this and like this, not here. Not that that doesn't work, but this is a better price to enter with lower risk. Okay, so that's what gold looks like right there. All right, next up is a question on, let's see here. And let me put it back on the different choices you all have. There we go. All right. Um, Next up is, am I using a 10% alert on my 10% alert? No, no, leaps are a completely different risk, and we budget them in the same way I would shares, but no, I do not use 10%. Um, how many alerts per month? Great question. Does anyone think that we're going to have like clockwork certain pullbacks? No, right? So think about it this way. It's not about how many times can I get in. Remember, we're long-term trading here, gang. If you're looking for active trading, join me in the mastery, right? That's going to be your best bet. Join me in the mastery. As I was mentioning before, hang on, let me look at some of my recaps here. Give me 1 second. I'm going to actually pull up something I use in the room. Uh, Bear with me 1 sec. Here we go. RTX we bought for 350. I think those are trading over $12 right now. These are open swings. Hood we bought for $6.10. I think those are somewhere north of $15 right now. And FLR we bought for 410. It's just about $6. But let me give you one of the losses. I closed a trade out today. I bought Celsius for 335 and closed it out for 280. Do you think I could live and grow an account losing 55 cents per contract, but on the flip side, making 300% per contract? Absolutely. So if you want a more active style, if the question in your mind is how many alerts per month, I would say that mindset's going to be great for swing trading and joining me in the mastery. It's not going to be great for longer term. Remember, over the course of the last almost 3 years, or since September of 2022, I currently have 17 trades, right? I don't want to build a position of 90, right? What I'm looking for is not the number of trades. I'm looking for a certain return, right? I'm looking for a certain return. Okay. That's really what I'm looking at in terms of what it is that, and again, if you take a look at again the total, and actually you can even look at what I've paid, the average cost and the current. That's another way you can look at it, right? Whether you're looking at the 1 year, oop, that's not what I wanted to do. Whether you're looking at the 1 year or the total return since inception, again, probably the best thing to do is look at where I bought the shares, the average cost, and then compare that to where the market is right now, and you'll get a good idea of what the portfolio is doing. So sometimes if we get a lot of pullbacks, Q1 of this year was really active. Q1 of this year was absolutely active because we were getting the pullbacks. So what I tell traders is it's any kind of trading pullback strategy style, like I use for long term or even my swing, they're going to come in clumps. They're going to come in bunches. So if you're wondering, Rog, what about swing trading in the mastery? How many alerts or trades do we have? I think we rolled into and through July, we had 18 trades. 18. Okay. So that's something else to consider, right? If you want activity. So I'm not looking for, I think the last few last few months, I think we put on 6 trades so far this year on the long-term account growth. AbbVie, Walmart, Coke, Altria. I think what else? SPY, most recently TMUS. So we've been pretty busy. But again, it's not the number of trades, it's putting together that portfolio. And right now, with a lot of the macroeconomic uncertainty, along with the is Jerome Powell going to keep his job? What will that do to the bond market? What's happening with the tariffs? We're going to continue to see volatility. So I'm very optimistic about some macroeconomic opportunities for us to take advantage of, as well as the current monetary policy cycle. So I'm pretty stoked about that. There's still a lot to be done, and we've already been quite active this year, and I continue to expect to be. Our most recent entry was May. So yeah, we're definitely pretty active. Do I do leaps on futures? No. What I would say is if you're going to do leaps, focus on the ETFs. So they can get very expensive if you're looking at further dated on the futures. I tend not to do that. You certainly could using the process I'm teaching, but I tend to, let's say we're trading gold, I'll trade GLD. Or if we're trading the S&P, I'll trade SPY. Or if we're trading the Russell, I'll trade IWM. If we're trading bonds, which I do have an open position in, I'll trade TLT. All right. Let's see. Other than when I want to touch the money after security makes the team, how do I manage the position in terms of exiting? Bruce, I try not to. There's really, at that point in time, Bruce, a lot of it has to do, well, I will tighten my stop and look for targets within a certain window of the touch the money. That's the goal. Right, that's exactly what I'm looking at. So if I don't need to touch the money till 2030, I'm not going to worry about 2025. I'm going to keep letting it climb. And you know why I'm going to do that? You might say, wrong, but what about, I hear you, but let me show you this. And I'm pretty sure I have this image. And it's an image of the tendency of the stock market over time. I think too many traders are not giving themselves enough time and solid positions, and then they scale out of these positions way too quick, and then they miss a lot of the continuation because they get shaken out by chatter, they get shaken out by fear, right? This is a pretty good image right here. This is the S&P since 1985, I believe. Do you see what I'm talking about? And every one of these red things, I know it's a little difficult to see, but every one of those red lines, it was the reason it was the end of the world, the reason for the crash, the reason to bail. I can tell you almost every one of these, I went blue light shopping, blue light special shopping. So that's why I want to use time and that touch the money. Does a long-term alerts will still be available? Gang, if you are a Sector Secrets Mastery member, nothing is changing. All I would say is if you'd like the class, there's a special deal for you. Nothing is changing if you're a current member. And if you want to grab the elite, you get everything that I'm doing with the swing trading, you get everything that I'm doing with the day trading, as well as the long-term account. Okay? So swing, day, and the long term. This is everything, right? But if you're already a member, you can pick up the class and you're going to do sort of discounted rate. It's a really nicely discounted rate. And if you have questions about that, just call the office and they can help you out. All right. Do I sell when I get red candles? No, I do not. Ashok, nice question. Not a bad idea in terms of if you're near your touch the money date, right? But no, I don't look for red candles to sell on the weekly chart. No. Do I keep the leap to expiration? Well, not unless I want the shares. I've done that before. Yes, but not unless I want the shares. All right. What platform do I use? Oh, yes. So let me mention something else. This isn't about some super secret indicator. These are indicators that I've used for 30 plus years that I'm going to show you to set up for free on TradingView. And then how, more importantly, how to use them. So I use TradingView charts. That way you don't need Thinkorswim. If your broker doesn't have my indicators, don't worry about it. You can even use my indicators on the free version of TradingView. So you don't even have to subscribe. If you're a subscriber, fantastic. But you can use the indicators. I don't think that's changed, but that's still true, right? If they've got a free version of TradingView, I would recommend using TradingView as a backup to everybody. It's really inexpensive. But even if you're on a free account, yes, you can use the free tools. Okay. And so this is not about any indicators you're going to need or any subscription to the indicators. We're going to have a session that Lorna Bot's going to do to help you set up your trading view. That way, regardless of your broker, you've got the platforms and the indicators exactly like I've shown you in today's charts. Okay, so let me see. Leaps on futures, trades per month, take the money off. Let's see. What trading platform? I have a number of trading platforms, gang. So part of the class, I'm going to get into the different types of portfolios, or just, portfolio sounds so fancy. How do I group stocks up in terms of my touch the money date? So I'll get into that a little bit because some folks might want a retirement account, others might want a college account, others might want something for vacation. So all of these have different time horizons. So at the moment, I think I have 6 of them, and I have that spread across a handful of brokerages. The brokerage is is less important, right? It's really less about the brokerage and more about the setup. So wherever you have your money kept, great. Yeah, great. And then I think that was it. I sometimes will keep the leap to expiration, but most of the time I treat it as a long-term trade and I will get out before expiration. Okay. So the free version is not ideal, but it is workable. What is it? 2 or 3 indicators on the chart? But oh, they've reduced it to 2. Okay. It's still workable. It's still workable. Less than ideal, but it is workable. Yeah. All right. Let's see here. So I answered the questions in the Q&A. I think I answered all the Trish Boss sticky notes. And by the way, gang, I'm trading the most basic style. We're buying long calls or buying shares. Now, I can't speak for every brokerage style account out there, but I will say most brokers are going to let you buy long calls. We're not selling premium. I'm not shorting anything. It's either buying shares or it's buying long calls. Okay. So I'm not teaching anyone about investing, not at all. I am not an IRA. I am an individual, self-directed retail trader. But I think anyone out there who's buying low, selling high, is putting on a trade, even if that lasts 20 years, because I'm using trading timing, trading position sizing, and a trading risk management mindset to do it. So for me, the length of time is a matter of lengthening the time frame, and I'm putting on a long-term trade. Yeah, long-term trade. Okay. Laurel says, no wonder you never fret the drops. Right, exactly. I never lose sleep at night. Absolutely. And remember, gang, I'm never just telling you do this, do that. This is education. These are trading ideas, and I'm going to teach you how to make sure this is something, A, you understand. You've got to know what you're doing to have faith in the long haul, and B, so you can make sure it's appropriate for your account. I want you to be the director of your money, right? Because no one cares more about your money than you do. All right. Hey there, Yee Yee. Great to see you. Looking forward to seeing you. Yes. Hope everything is well. Um, let's see. Is that all the questions? That's it. That's it. All right, gang. Thank you for all the questions. I really appreciate it. And Devin, you just mentioned personal portfolio and goals. I don't get into it, but you're going to learn how to do that yourself through the processes that we teach you. You'll be able to coach yourself through that. And of course, if you're in the elite with me, if you have particular questions, yeah, I'm always available in the room to help you out. And that's if you're in the elite with me 5 days a week. And if you need help with the long term, I can always help you, fine tune what you're looking to do. That's all. That's always something I'm open to doing. All right, gang. Check out simplertrading.com/grow hyphen strat. And I will see you all on Saturday. Don't dilly-dally, gang. Saturday is going to be here before you know it. I want to make sure you get your chart set up so you're ready to rock and roll. 11 o'clock Eastern, day after tomorrow. All right. Be good to each other, gang. I'll talk with you soon.